Okay. I think we are live. Let me just check on Binance Live. Okay, we are. Awesome. Oh, wow. The chat is
Lit.
already popping in.
Nice. Are there
All
fire
right.
emojis?
Yeah. So, hello, everyone. Thanks again for tuning in to the Binance Simple and AMAs. So we are launching a series of AMAs this month. As I think a lot of people already joined yesterday. So once again, let us know where you guys are tuning in from, what country you guys are from, and what time it is for you. So again, for this AMA, so we've already distributed, we've already chosen a few questions beforehand on Twitter. Thank you guys for posting and submitting those quality questions, which we will pick today and have our guest answer. And then during the AMA today, you can post or comment quality comments. We will choose. Excuse me. We will choose questions or comments from the live comments today for a chance to win the giveaway today. So yeah, let's jump right into it. So good. Really glad to have you today, Varun. Do you want to tell the audience one or two things about yourself?
No. Yeah, of course, no. Yes. The answer is a yes. so glad to be here. Thank you so much for hosting this. Yeah, hey guys, this is Varun here from Hashflow, the co-founder and CEO. And yeah, I think we've been, doing Hashflow for the last two years now, nearly 2 years. Prior to that, interesting thing that people don't know about me was I was an aerospace engineer. So I used to build like satellite systems, and I was like a space nerd, and I wanted to be an astronaut. But I still want to be an astronaut. But I think crypto is also fun. So there was an interesting journey to go from space enthusiast slash aerospace engineer to crypto. So that's sort of a little fun fact. But I also, in a free time, enjoy surfing and dancing. So if that helps, if anyone cares.
And you're also skiing right now, right?
I am into skiing, but I'm not as good of a skier as I am a surfer. Right, so I've been surfing for a lot longer than I was skiing. Like my co-founder though, he grew up in Romania, so like he literally was born in a skiing resort. So he's like skied all his life. Uh, I, on the other hand, wasn't quite fortunate enough to be blessed with the snow-clad Alps. Yeah. But I had proximity to the ocean, which helped.
So yeah, a really interesting background. You said you're in aerospace. I guess there are a few people in crypto that's involved in space and crypto, right? The other one is probably Elon Musk. But how did you get into crypto?
I suppose
Interested
I
in the
took
story.
the word to the moon too literally or figuratively, as you can.
Faster way to the moon.
So I was like, okay, well, this is one way to get to the moon. No, joking, just kidding. But I think my transition into crypto was, I would say, it's more ideological, right? To a massive degree. Like I got into the space around like 2015-16 time zone, and it was a funny story that I was in the space industry at that time, didn't know much about crypto or money or finance in general, and a friend of mine, I ran into him. Well, not friend at that time, but I became friends with him in a hot tub, and he started telling me about Ethereum, and I got curious. I was like, "What is this? This sounds really interesting." And then I went down the rabbit hole of just uh, crypto, but not just crypto, but money in general. And I think one of the interesting realizations that occurred to me at that time, the insights you call it, is crypto is to money what the internet was to the flow of information, right? So more broadly speaking, if you think about money as a technology, then before 2009, you can think of this technology being run or enforced upon you through the big governments around the world who had monopoly on this technology, and you as a user had no choice but to comply and use this technology, right? So it's like there is a tech, and someone forces you to use that tech, and you have no other choice to switch to anything else, right? So it's a system of compliance to a massive degree, and what crypto did essentially is it basically removed that constraint, and it said money could be a free service that anyone can offer, right? So long as there is enough incentive for anyone to accept something as the incentive design choice, uh, that would be treated as the unit of account for trading something of value. So in that sense, if you think of fiat as a uh, as a highly optimized rent seeking mechanism, or a memeplex, right? Then crypto is basically removing that and turning this into a choice that anyone can opt into, right? And that to me was like super interesting, because personally I cared about things like self sovereignty and freedom, and just having the individual make the choice for what's good for them. And I think this to me like resonated a lot. That was like, fun. I should look into this more, right? So that kind of how was the tipping point that got me into the space for 2.5 years to 3 years to follow. It was just learning how to build things in the crypto space, and started Ethereum development and so on. But 2019, 2020 is when the Hashflow thing happened. But that's been the short journey of how things unfolded. But I can also go into the philosophy of money and so on, and earnings if you want to. But that's a different rabbit hole. So
Seems like we'll need to have a series of AMAs just to go through the background of your crypto stories. But I guess on this question about the team and the backgrounds, I think this would be a really great first question. So by Shalba 101, congrats. So other than yourself, can you give a brief introduction of the people on the Hashflow team?
yeah, no, absolutely. So I think what's funny is like I'm the likely the least smartest person on the team. So I think my other co-founders, pretty much most of the team is like interestingly enough, they're all Web2 natives. Most of them come from Airbnb. Like I think Victor, he was at Airbnb for like 4.5 years. He was a staff engineer there, and then prior to that, he was at Facebook. Went to Oxford for CS and so on. What's funny is actually Victor and I were competing in the same Olympiad back when we were in high school, but we didn't know we were doing that. So we found out like a few 10 years later when we actually met here. So a bunch of other team members are like looking from Facebook and Pinterest and such. So basically, we pretty much poached all the smart people from Web2, who don't like Web2 or ideologically are more in tune with the crypto mindset, or the libertarian anarchist mindset, but not so much anarchist really. We still like rules. It's just
I mean, the real disruptors normally have a deep understanding of how Web2 works, right? So having this background deeply involved in this, you would know the inner workings of those, and that's why I guess that's one of the motives on why you jumped out and created your own project.
What's funny now I think about it is 80% of the team is from Facebook. So I just realized like literally everyone we post was including a design, engineering, and Victor is from Airbnb, but he used to be at Facebook before that, right? And even our investors like Electric was a lead investor, and Hasib, Dragonfly, which we'll go into, they used to be at Airbnb and Facebook as well. So I think there's a pattern here.
So if do we have any Facebook employees in the audience? Are you guys still hiring?
We are still hiring. We're hiring us 2 backend engineers. So yeah, I think this is the time.
This is the time. Be sure to shout out. So Johan, if you can help us choose help Hashflow also choose hiring candidates from the audience as well. But yeah, I think a great background. I also met Victor myself when he visited Taiwan. Really great person, really smart. But yeah, I think a great team really is the foundation of a great project. But I think a good follow up as well is other than the team, I guess investors are very, very important to a project's development. If you could touch on this.
Yeah, absolutely. I mean, we put the list obviously on the website, so if anyone just scrolls down all the way down, they will see it. But we've done like 3 private rounds in the past, and the big investors are like Electric Capital, and then Dragonfly, and then Jump Trading, and then there is also Balaji Balaji Srinivasan, for people who know, and then there's some other angels like Melton and Jason Choi, and then Wintermute Trading, GSR. So there's a massive list, right? But I think these are some of the notables who've been like actively involved with the development. But especially like shout out to Hasib and Abichol and Ken. And they've been like really hands on since day one. So I think they've it almost feels like they're a part of the team to the massive degree.
Yeah, and really big names
Mhm.
in the crypto industry. Sorry. But yeah, okay. So moving on to the next question, I guess we can move on to the project itself. So could you give like a brief intro to Hashflow, what it is, for people that don't know,
Yeah.
and how does it work?
No, all right, the fun stuff. No. The TLDR is like the forward definition is Hashflow is a decentralized exchange protocol, right? So now, double clicking on that, what does it actually, what's the underlying mechanism? What makes it interesting, or how does it work? It's more specifically a DeFi native RFQ system that connects market makers and takers via off-chain RFQ system, right?
So
And
RFQ is request for,
request for
yeah.
quote. So to expand on that, what's going on is if you're a trader, if you're a user, you go and you enter, you want to buy 10 ETH for, like, let's say you want to buy 10 ETH, then that quote, that request would be sent to all these market makers, and they'll respond to that via WebSocket APIs that they're running. They'll respond to that with say, like, fine, I'll sell you 10 ETH for like $10,000. And what they'll also do when they respond to that is they'll cryptographically sign that quote. As a result, once you have the quote, then you as a user, you're like, oh, this is a good price, let me lock it in. Then you hit the trade, and then the swap will happen at the smart contract level. And what the smart contract will also do is it will check to see the quote was in fact signed by the party that issued the quote, in which case this is the market maker. And if that security check passes, then the swap will happen between the user's wallet and the market maker, right? And what's the point of doing this? It's the architecture. I think we talked about the benefits, but really what's going on is it actually makes the user experience far better in terms of having their quotes protected from any kind of front running or sandwich attacks and so on. It makes the price discovery more efficient because most price discovery happens using limit order books, right? And then if you wanted to do like these trades without the price being impacted significantly, I think a common term that we use in traditional exchanges is OTC, or over the counter trading, where if you want to trade large trades or even small trades without impacting the markets significantly, then you would typically work with market makers directly to get these quotes, right? So that's the same mechanism that we apply here, but we do this in a more programmatic way, so that anyone can just simply go and then just request a quote and get it, right? So it's almost like OTC on steroids. Now, again, interesting because it cryptographic signatures means there is no front running or MEV attacks that we can talk about, but also your price discovery is far more efficient, and it also allows you to do more interesting things that on-chain pricing may not, permit, and things like doing cross-chain or being able to price non-delta one assets like derivatives and so on, which are really difficult to do if you are fully relying on on-chain pricing mechanism without any external feedback, right? So that's sort of the general idea of what Hashflow is doing, and the primary goal is to really build a robust trading experience where people can trade any asset, any chain, with all the complexity being abstracted away from them, and just being able to trade without any counterparty risk, right? And then we're building the fundament or the primitives. We've started with the RFQ, and now a bunch of interesting things are on the roadmap that are about to come this year. So exciting times.
Awesome. Thank you for that very, very thorough explanation. I think just to jump back one bit, so Hashflow is a decentralized exchange, right? So
Yeah.
DEX, a DEX. Just like Binance is a centralized exchange, users can go onto it to trade tokens,
Mhm.
to trade assets, right? And I think I see we have some good follow up questions here. You went into how Hashflow is different from other DEX
Mhm.
from other DEXs. So I think one thing you mentioned is RFQ. So average artist asks, so what is like in traditional finance? You mentioned like you made the comparison also with something like an OTC where where sort of like the vendor is the request the vendor for the request for code or the market maker. Um, and how is it better than AMMs? And if you could touch a little bit on what an AMM is in the context of
Mhm.
other DEXs. And then I think the user also knows that the other dexes that we normally see in the markets are like Uniswap, SushiSwap, which are prominent names when people think about dexes.
Mhm.
And why does this request for quote really change the way user will be able to trade?
Absolutely. I think before we even go to AMMs, perhaps it makes sense to touch briefly on what MMs even do. I mean,
Yeah.
right? Uh, so I think that one of the key things for any exchange, right? Forget kind of DEX or a centralized exchange, doesn't matter. Like for any exchange to work, is they need liquidity. Liquidity is the king, right? So as a user, if you're going there to buy or sell any asset, at any given time, you need some counterparty on the other side who's willing to buy or sell assets to you, right? And if you don't have that, then you have a bad experience, and then you would just never trade, right? So at least you wouldn't go on that venue. So uh, this is basically what many of the professional market makers do, is they play this role of being the counterparty to every trade, where if you want to buy ether, they will basically sell it to you, and if you want to sell ether, they'll buy it from you, and then they'll have their risk strategies behind the scenes that they will use to stay delta neutral and not be overexposed to the risk and so on. But the general idea of a market maker is to provide this liquidity on a platform, right? So if you, even if you go on Binance and you see this order book and all these price levels and trading taking place, right? So behind the scenes, you have market makers who've been providing liquidity along with just traders who are trading against them, right? So there's, and then the order book is doing all the matching, and that's kind of what leads to price discovery, right? It's like if you go to an auction house, like, hey, I want to buy ETH for $10, $10 1 cent, $10 2 cents. Then someone's going, oh, okay, I'll buy it for this price. Then you lock it in, then that becomes your market price, right? And then that bidding and asks, the process continues to go, right? And that's what results in the price moving up and down over time, because what's going on is this whole process is called price discovery, and it's usually taking place on your limit order books, right? So it is safe to say that limit order books are the most efficient way to enable price discovery and trade, right? And that's how historically trading has been for the longest time. And now, I'm actually going a bit low back in the history because I think this context is important to understand how AMMs work and what they do, and I think where we think the future is going to be. Right. Uh, the same fundamental. This was like how trading worked in like Wall Street or New York Stock Exchange and so on. Right. And then crypto came in, and then exchanges like Coinbase, Binance came about. Which I think before Binance, you had like things like Poloniex, Bittrex, other, or Mt. Gox even. Right. So the infamous, if anyone remembers that. So what they started doing is they started taking users' money in their custody, and then use that uh, to enable this trading, because the whole idea was trading at that scale was not possible because of limitations of L1 blockchains and them being slow. And as a result, if you want to enable fast, efficient trading and price discovery, you need some kind of an off-chain order book mechanism that allows people to do that. And the best way to do it is let people be like, hey, give me your money, I'll store them safely, and then I'll use that as the backing to basically enable liquidity in these books. And at some point when you want to settle, take your funds out, they'll do an on-chain transaction to send your money back, right? That was the mechanism that led to the centralized exchange mechanism, right? But then uh, there's many hacks in the 2016-17 period, which kind of led to this new movement of building order book on chain. I think if anyone remembers, Ether Delta was one of the new things that came about in 2016. At that time, it was a fully on chain order book built on Ethereum, and then 0x came from that. So 0x basically took the framework of Ether Delta and turned that into APIs and said, well, anyone can start an exchange using 0x APIs that resembles what Ether Delta looks like, right? So that was the phase one of Dexys. And the whole motivation to create that was to say, like, okay, well, we don't want to have any centralized party custody our money. Because if the whole point of crypto is be your own bank and not give your money to anyone, then the whole sentiment was exchanges are acting like centralized bankers who keep your money and then do things behind the scenes which may not be visible or transparent to the end users, right? So, but again, unfortunately, we were hit by the limitations of L1, and as a result, it wasn't as scalable as we thought it would be, right? So, and it's also really challenging to build order books on chain, which actually work. So there was mechanisms where you do off-chain order books and then you do matching and then you do on-chain settlement. But at the same time, still building a UX that is as seamless as something like Binance was like really difficult to do on chain, right? So even the hybrid models were interesting, but they were not like that great. Like Radar Relay or something like that came about. But again, it was okay. And then came 2019 Uniswap, right? This is now we are entering the AMM territory. And this was the key novelty. You can say the 0 to 1 novelty that basically created the whole excitement around DeFi summer, right? And led to everything else that followed, right? In fact, even Hashflow, to a large extent, the inspiration came from Uniswap, and then, well, we can improve the design further, right? And the whole idea of AMMs, we touched base on what market makers do earlier. Like we said, they're responsible for providing liquidity. But what AMMs said, as the word stands for automated market maker, right? They said, well, let's not have any market maker anymore. In fact, anyone can become a market maker, right? And the way you do that is anyone can just passively throw in some money in a smart contract, and your smart contract will use some math formula to determine what the price or the exchange rate should be, and it will use that exchange rate to give user a quote, right? And this is where you may have heard of this word called bonding curve, which is nothing but a math formula that basically sets the price of an asset using this curve, right? And that price moves based on how the price in the market moves to begin with. So the general idea is the way AMMs work is by taking LP capital, which is anyone can put money in the smart contract. And then what the smart contract does is it keeps adjusting the price as people trade more and more against it. And it adjusts this price in such a way that creates arbitrage opportunities for any trader to trade against this to bring the price back to what is the market price. So you have your market price or price that is being discovered on Binance, for example, on the order books. And as a trader, you can use that as a price reference and then trade against the AMM until there's no more arbitrage opportunity remaining to begin with. So this is good from a trader point of view because you always have an arbitrage opportunity because the curve keeps moving back and forth around the mid-market price. It is, however, pretty bad for the LP who's parking capital there because you're basically doing a bad trade where someone is trading for their benefit at your expense if you're leaving capital in the pools, right? So and not to mention, this is where more interesting attack vectors emerge. Things like I think we talked about MEV and sandwich attacks and front running and so on, because again, the entire pricing is being done on chain using a curve, right? So, and we can dig deep into what MEV and sandwich attacks are, but I just want to set that context on. As a result, as a taker, right? It's really, especially if you're doing really large trades, unless you have tons of capital in the pools, it's really difficult to get like really good price without the price having massive what you call slippage in terms, because if you have very low capital, then the more you buy, the price moves exponentially to infinity, right? So as a result, to reduce that impact, you have to have tons of capital, and if you don't, then your price is like not as good, right? So that's one of the shortcomings, you could say, of AMMs. And you will notice that most of the time, most of the trade volume on AMMs is still concentrated in stable coins or like ETH and USDC because they have billions in TVL in the pools. But the moment you drift away from that and you look at long tail or anything in the top 20 and 30 assets, most of the volume is still on Binance, primarily because the AMM rates are pretty bad. And the reason is because there's not tons of liquidity in there, right? So obviously the one way to solve this is to increase the liquidity in the pools by adding more and more assets, but then that's not the most efficient way to use capital, right? So this is sort of the design constraints that we started to think about on how can we solve these things, right? And this is kind of where we think RFQ comes in and comes in really, really handy, because the same market makers, now we're revisiting back again, we're removing the A from the AMMs and saying, let's just use professional market makers once again, who can give you quotes, and then a user does the swap. And because the quotes are, or the pricing is happening off chain, you don't have to worry about any on chain constraints that will impact the price. And as a result, you don't need tons of capital being parked in the contracts to achieve the same result that you would with an AMM by adding a lot more capital in the pools, right? So the general idea of Hashflow here and RFQ is instead of using a bonding curve or some kind of pricing mechanism on chain, you're just letting your market makers give you a quote directly. The same market makers are already providing liquidity on other C5 venues like Binance and such, right? And then they're able to hedge their risk, but then also they're giving you quotes here and they're cryptographically signing it, which means you get to avoid or circumvent your MEV or front training attacks. And also just because the pricing is happening off chain, you don't need to lock in tons of capital in the contracts. And it doesn't matter what kind of asset class it is, you can actually get a pretty good rate that is at par with what you would see on things like Binance and so on, right? So that's the general benefit of using an RFQ, is it actually scales DeFi in terms of cost and price efficiency, and also just makes the market structure far more robust than an AMM would, right? That's a long, detailed answer to a very short question, but hopefully
No, thank you.
this summarizes everything.
No, I think that was super informative. But let me try to summarize that for some of the audiences who might not be able to keep up. I'm also trying to learn along the way. I think you obviously are very knowledgeable of your history around the evolution of dexes on chain, and the financial the traditional TradFi instruments, and how it was implemented on chain. So I guess essentially at the start there was, for crypto, there was centralized exchange like Binance, or at that time other exchanges, where if you want to trade crypto, there was an order book, right? So if you go on to Binance and you go to BTC USDT trade, you'll see on the left side there's there's an order book, right? So if you want to sell BTC, you can see how at what price, how much BTC, how many BTC someone is willing to sell, right? And then the same for the buy side. And the convergence of this is, like you said, is the price discovery, or the market price. However, for a lot of these markets, the liquidity is not enough. So people, like, if I want to buy a larger sum of BTC, for example, and the people that are willing to sell BTC isn't enough, then I'd have to go up the list, where I will have to find higher prices for BTC in order to get that amount that I want. So moving from this centralized exchanges, but I mean, this is a more the centralized exchange model is more of a I forgot the word in English, but it's a mature model. But then moving that, oh, sorry, I think I was muted. Moving that to on chain, then there was the AMMs in. Am I getting muted?
No, I think it's me who muted myself and unmuted.
Oh, okay. No,
I
I saw my microphone got muted. So they're moving on chain because, like you said, there were some problems with hybrid models where users were concerned with the traditional centralized exchanges, where they don't want their tokens or assets to be custodied by a third party, right? So like the ethos of crypto is to have, and also like our CZ is also a big proponent of DeFi. So moving on chain, the how we can achieve a trading platform on chain. So Uniswap came out with the AMM, where everybody they could become AMMs by, for example, for BTC. Let's say it's a ETH USDT pool. Then if I am a user, I can put ETH and then put USDT and then put them together into an LP and then provide to that liquidity pool, where people could trade against that, and then I can earn fees from those. Now, I did have a small question here. So you mentioned that when users trade, or when users like there's a large buy pressure and then there's a market price divergence from other markets, that's when arbitrageurs come in, right? And I think you mentioned, I'm not sure if I got this right, but you mentioned that in this trading at the expense of the LPs. So I guess in one aspect for the LPs, they're earning money from the fees, right? So the larger the trading volume, they are earning fees. So from that aspect, yes. But then that in the aspect of, because of the price divergence, they're sort of losing potential value they could get from other markets. Is that what you were referring to?
So basically, think of your AMM as this smart contract that basically trades on your behalf, right? So what you're doing is you're giving your money to the smart contract and telling your smart contract, hey, go and make money for me. Go and use this capital, put this capital to use, and use this to provide liquidity. Because this interesting thing, oftentimes people confuse putting assets to liquidity, but there's a little more to it. Right? There's a nuance there. There's inventory, and then there's liquidity. Right? Liquidity is when there is an open buy or sell order. But if there is no open buy or sell, then it's just empty capital sitting there, which is like inventory, right? Like it's not really being used for anything. So it's kind of like if you ever use Airbnb or anything else, or Craigslist. If you go and you see housing listings, if no one is listing a house to rent, then there is no liquidity on Airbnb, right? It's just a bunch of people with accounts. That really doesn't move the needle. So you actually need not just people with accounts, but you also need them to list their houses, and not just register them, but also say they're willing to lease their rooms, things like that, right? So that's the same analogy you can apply to liquidity in this sense. So what's going on is if you put money in the smart contracts, that's step one. But then your smart contract needs to use that to basically start giving quotes to people, right? And the underlying mechanism of how your smart contract issues quote is basically by creating arbitrage opportunity for a person to come and trade, right? And if your contract is designed in such a way that it will always create arbitrage for a person to trade against itself, then really the person who's losing here is the one who put capital in, because it's not really a smart trade, right? Because it doesn't factor in the market conditions, and it's not using that to adjust the risk or anything. It's just simply using the same formula. No matter what happens in the market, it will always continue to give quotes. And this is kind of where your LP is kind of losing, right? So even though there's LP fees, but I think there was an interesting tweet thread that came about like a few months ago that dissected the analytics, and it said like that the LPs net took like about 170 million in loss for the last year or so, right? So because there's no design where everyone is going to win, right? If it's a trade and someone is winning the trade and someone is losing the trade, and typically if you're saying you're always going to create a winning opportunity for your trader, then the losing person is always the LP, right? So or at least in most cases.
Yeah,
like this
so
is a perpetual
like
money.
recently,
So
I think recently there was the GMX with the
Mhm.
they had a token which was acting as the counterparty to all of the trades, right? So
Yeah.
but I mean in terms of like Uniswap,
Mhm.
uh, the LP they would endure impermanent loss, like
Yeah.
if there were price fluctuations, whether it's going up or going down. Um,
Yeah.
but I mean, in terms of like, when you say there's always going to be a loser in term for the counterparty, in that sense, would that be the LP?
In this case, yeah, because the LP is just putting money in the contract, right? And the contract is trading with the traders. So if your trader is the one benefiting from that trade, because there is a fair price in the market, and your smart contract price is slightly away from that fair
Mm-hmm.
price, which means which to many people they describe that as impermanent loss. And then unless the market price again fixes itself to the point where the pools are balanced, you are sort of losing that money there, right? That's basically the net loss your LPs encounter. But I think to summarize all these things up, right, the main concern people had was they didn't want to custody their funds with centralized venues. They wanted to trade at a venue that had no counterparty risk. And they wanted something really, really simple. So what Uniswap invented is a simple calculator that anyone can go interact with. There's no other complexity. They'll ask for a quote, they'll always get a quote, right? And what Hashflow did is it took the same design constraints, but it made it better by basically enabling better price discovery, which means better prices for the end users, and their trades are always protected. From I think a new question, what is MEV and how is Hashflow MEV resistant? So things like these. This is where I think when users ask why should they trade on Hashflow, that's the answer. Is that your trades are protected from all these kind of attacks. You can trade any size and you can trade most asset classes without that kind of a price differential. And since we're already here, you can actually go and maybe try a ApeCoin USDC trade and see the price difference between like an AMM versus Hashflow, and you right away see how that quote because it was used it was pricing in RFQ as opposed to proprietary inventory in a smart contract. You can see how much delta there is, right? So I would say if you're already here, you can go to app.hashflow and try out like a APUSDC trade or something like that, and then see what happens.
And especially for pairs that are not that popular in a sense,
Mm-hmm.
I think the price and efficiencies in the AMNs wouldn't be as efficient
Uh,
as would that be the case?
uh, can you repeat the question?
I was wondering if these price inefficiencies were more evident in pairs, in trading pairs, or trading pairs that were less popular or with less LPs, right? In these traditional AMMs,
Mm-hmm.
whereas with Hashflow there is a MM, or like the RFQ, where the market maker provides the request for code, so that
That's
the price discovery would be better, um,
that
especially for the smaller pairs,
That is correct.
essentially.
Because in a sense, you're basically going to the same people who are responsible for price discovery to basically do this, right? So an example right now, I'm on the terminal. If you're trying to buy like thousand, or if you're trying to sell 1,008 for USDC, our quote is about 5,789 versus uni. It's like basically it's pretty in that sense, like the difference, and then the slippage they're offering is about like 0% in this case because it's like the fixed price, versus that's not quite the case when you go on the other
Yeah.
venue.
So takeaway, just go try it out if you are interested in looking at the different prices between Uniswap, SushiSwap, 1inch.
Or even or in Gal, I'm assuming Gal was one of the other popular pairs that launched here, right? And you can look at the liquidity for Galaxy token.
Galaxy? Okay. Yeah. So yeah, I think the best way to navigate crypto is to try different applications out, and really see if they're how their user experience is, if the application is working. It's not just about the white papers and the AMA. So
Mhm.
yeah, I think if you guys are interested, you can go try it out. But yeah, I think this question we can delve deeper into.
Mhm.
So MEV, I think this was a topic that was pretty hot as last year, since with the Ethereum merge,
Mhm.
and this became a topic where I think the concept of the staking validators front running users or traders,
Yeah.
especially on with AMM models. And so with like you mentioned, with the RFQ model with Hashflow, could you explain a bit first on what MEV is, what front running is, and then how Hashflow would be sort of MEV resistant?
Yeah, I think I will speak more in the context of trading, right? What MEV stands for is like it's minor slash maximal extractable value, right? So what really MEV is it's basically the value that can be gained from the power to reorder transactions in a block, right? So if you're a miner, then you basically have the power to a produce these blocks, but also order the sequence of transactions in a block, right? And what this means is that if you're someone who's trading, or if the trading happens on chain completely, where the price of the asset is done on chain, that basically it's a transaction, right? And every transaction that happens on chain moves the price a bit. And if you have the power to not only have the last look on these incoming transactions, but also have the power to order these transactions in a certain sequence that can move price in a way that is favorable to you, then this becomes a very, very favorable trade for someone who can exploit this, right? And that's basically what MEV is in this scenario, right? So as an example, because you can do stuff like this, like you see a big trade coming in for ETH, so what you do is you buy a bunch of that and then sell it after, right? But then now, what you've also done is that you've inserted this other trade that you saw was going to change the price in your favor. And by doing that and ordering in a way that you favor it, you've made a risk-free money, basically, right? And that's basically what your MEV such sanction attacks are, right? And this is more prevalent if you trade large size trades. Because if you're doing a large trade and you see this opportunity coming in, you can instantly exploit that, right? So that's what we really mean there, right? And there are different ways. There's obviously flashbots and all these guys who've been building various mechanisms to uh, there's a big debate on what's good MEV, bad MEV. So we'll not get into that for now. But really, what they're trying to figure out is how can we bribe these miners to make sure that the user at the end of the day gets the best of the bargain, right? And what we said is maybe we can remove most of the complexity, at least in the context of trading, and just use off-chain pricing, not use on-chain pricing, right? So use RFQ again to basically get the quote and have it pre-signed. So even if your miner has the power to reorder transactions, or even if they have the last look, they can't really do anything about it because the trade has already been agreed upon and the quote has been signed. So they can't really go and front run that transaction because there's nothing to front run. They'll have to again go and RFQ themselves, and they'll get a really different bespoke quote. So as a result, them having knowledge and of the incoming transaction and the power to order this transaction doesn't really impact the pricing because pricing was never done on chain to begin with, right? So that's the whole idea of how we circumvent that problem, right? So that's the general idea of MEV and how we are solving for it.
Yeah, and I think you also addressed the. So this is regarding this question. This is also a solution to
Yeah.
the past question, right? So you mentioned MEV because right now, miners, or in the case of Ethereum, validators or nodes, they have the power to reorganize or reorder the transaction. So if they see a transaction come in, they can do a transaction at a cheaper price and then sell a higher price to your transaction, in a sense. So if we have it pre-signed, could you explain a little bit of the content? I like not too technical explanation on how like pre-signing would actually solve this problem, or regarding to this question.
Yeah, so the idea is your market maker is giving you quotes, right? So as a result, they basically you're getting quotes from them, and they are signing it using the public-private key combination. This is kind of how every crypto transaction works. Is if you want to initiate a transaction, you have to sign that transaction using public key cryptography, right? And then the idea is the other person can use your public key to derive derive your public key from the signature to ensure that only the person who issued the quote was the one who in fact approved or authorized this transaction, right? So and you're applying the same fundamental to trading itself, whereby you're signing the quote and your smart contract does the check, but the price was already something that was again it's like you and I agree on a price, and then you sign that, and then the smart contract, all it does is it makes sure it checks the signature. So if a third party sees that, they can't really do anything about it because any of their actions are not going to change the price that we already agreed upon, right? So that's the general fundament, and the whole idea of why we need pricing or signing is because if you don't sign it, then basically then it's hard to prove that the market maker in fact issued the quote. Like
Mm.
technically, I can just pretend to be a market maker and say, yeah, this quote came from me, and there's no way to guarantee that I'm not lying, unless, of course, the market maker signs it. Then I cannot pretend to be the market maker because clearly I do not own their private keys, right? Because they own it in their own custody. So that's the whole reason why you need the signing of the quote. But otherwise, you can just not have signing at all. But having that signing actually proves to you that the right person authorized it. And for context, I don't think order books on centralized exchanges use any kind of signing mechanism. They simply have two parties submit quotes, and then they match them using a matching engine. But because they go through other complex KYC procedure and due diligence and so on, they circumvent that risk in that way, as opposed to the way we are doing it, in which case we are more anonymous, but then we are using cryptographic signatures as a way to sort of have an idea that the person who is giving these quotes is in fact the person who's signing it as well, right? So
Yeah, so like the biggest difference here is that in centralized exchange, the settlement is also happening, or is happening off chain, or it's happening,
mhm,
is processed by the matching engine,
yeah,
that the whatever the matching engine that
mhm,
decentralized exchange is using. Whereas Hashflow, it uses the pricing, it gets the pricing off chain, but then
mhm,
pre-signs it and then sends it on chain for settlement.
yeah,
And then I think the comparison, important comparison here with traditional AMMs is that, for users that request for a trade, there's the settlement price isn't determined yet, right? So that's why these validators, they will have the opportunity to sort of front run and extract value from these poor traders.
no, absolutely. And also the thing to mention is like your centralized venues do not have real time settlement, right? Because your off chain order book does all the matching. But then if you want your funds are not in your private wallet until you go on to withdraw the funds from the exchange. That's the point when you'll check the balance and then you'll use your exchange hot wallet to send funds to the user, right? In this case, both the execution and settlement happens in real time, where once the price is agreed upon, the swap happens right away, and you have funds in your wallet, right? So which is kind of where you avoid like the FTX kind of scenario. But uh, again, there's pros and cons to both designs, right? With centralized limit order book, you achieve price discovery and far more efficiency in terms of how you can trade, and that's probably the best way to trade anyway, right? So and then with AMMs or real time on chain trading or execution, you sort of compromise the latency and efficiency of price discovery, but then you uh, enhance the idea of not having the counterparty risk of some third party, basically managing your funds, right? And that's really what it comes down to. So they have both pros and cons. And now, if you have to compare with AMMs, and what's the trade-off Hashflow made compared to AMMs, because nothing is perfect, right? So the trade-off we made is liveness assumption or uptime assumption, right? An AMM would be live so long as the underlying blockchain on which it's built is running, right? So like as an example, Uniswap will only go down if uh, Ethereum itself goes down, right? So until then, it will continue to give you quote no matter how bad the price is, right? So it will always be there. In case of Hashflow, because you're relying on market makers to fetch quotes, it is possible that sometimes a market maker may not give you a quote if they think it's a bad trade, right? And they'll likely have some other thing take on that quote because again they don't want to be the on the losing end of the trade, right? So at least not take on that risk. So you can achieve near like 99% uptime, but with Ethereum, with AMM, you get 100% uptime, right? And that's like you can't really there is no 99.99%. But I think that's an okay trade-off as long as you can deliver near 100% uptime, with while improving on other aspects of trading, right? So that's so how you think about it.
Yeah, it's the overall user experience. If they're getting better prices, I guess
Yeah,
1 or 2 minutes off,
yeah,
not being able to use it would be
yeah.
all right.
Better
Um,
prices and also making sure that they essentially receive what they were promised. Like if I'm seeing on my UI, I'm gonna get like 5,000 ape for like $100, and then finally end up getting like 4,000 ape instead, that's a bad UX, right?
Mm.
And if this happened because I got front run or MEV attacked, that's like not a good UX. On the other hand, if I see exactly what I receive exactly what I see, that's far more superior UX compared to something like that. Right? So
A quick question here. So, for traditional AMMs, if
mhm.
because I remember they can set the like slippage to like 0.5% or like 0.3% or even up to 1%.
Yeah,
Even if I set the slippage, if I set the slippage, will it go over the slippage in any case if I
it
get front
would
run?
it wouldn't. The transaction will just fail,
Yeah.
right?
Oh, okay. Okay.
So you'll just say like, oh, the tolerance was set to 0.1%. Looks like this is gonna be much worse than that. So uh, you will get that low nice TX revert error that you've been used to if you
And
isolated it.
the gas fee will still be spent, right?
Depends on where you insert the require statement. If your require condition was the first line, then maybe it will not use as much gas. But if you do the check after you perform a bunch of computations, then it'll use more gas to get there.
Got it. Got it.
So
All right, so I think we went through a very very deep dive on the inner workings of how Hashflow can provide a better decentralized exchange experience, DEX trading experience. I guess it's a best of both worlds, right? The pricing of centralized or traditional market makers, and then settlement on chain where
yeah,
you have full custody
that's
of.
that's beautifully put. Yes.
Thank you. Learning so much from the explanations. But yeah, I think moving on to the next questions, and I think for these three questions, congrats to you guys. Thanks for these great questions. But moving on to the next question, this is from the live comments. So King Kong asks, so HFT, of course, there is a token which was launched on Binance, launch pool last year. I guess many of you probably know of this project as well, our Binance users. But what are the what is the HFT token? What are the utilities? And
So,
maybe we can move on to the hash first as well.
oh, the fun stuff. Okay, so HFT stands for high frequency trading. No, just kidding. It's a Hashflow token. So it's a play on the word high frequency trading though. Uh, and generally when we launched, it launched as a governance token, right? So the idea is uh, uh, before the token launched, the protocol was very much like, the team drove a bunch of the product, and then what we wanted to do was decentralize the protocol and give the community and the users as much power and say in the protocol as they could, right? So and HFT basically allows you to participate and become part of the broader community. But beyond that, we haven't defined uh, of any one specific utility around HFT, and we kept it broad on intention. We wanted to build this with the community and use the feedback over time to define more specific utility around the product, as opposed to adding friction to begin with, right? And there've been some interesting ideas around using HFT as a way to incentivize token holders. So maybe adding fees, and once the protocol generates revenue, using some of the fees be given to the token holders, or maybe using the revenue to buy back HFTs and burn and things like that. So these have all been the ideas that have been floated by the community, right? And I think, and if any of those to get implemented, then that becomes a utility, for example, right? So
Mm,
it's been left open ended on purpose so that we can directly work with the community to figure out what's the right path in terms of we define a use case that doesn't really interrupt the flow or the user experience, but also uh, uh, at the end of the day, makes the experience of being part of the Hashflow community better for all the token holders. Right? So that's been the main purpose. But one of the interesting utilities that did come about recently, and I think this will segue into Hashverse, is this HFT follows this VHFT model, or the vote escrowed model, to be more specific, means your voting power or your say in your governance is a function of how much HFT you lock in or you stake, and the duration for which you lock it in, right? So if I'm staking, let's say 100 HFT for only 5 days, then I may not have as much influence on the governance, as the same person who's locking in 100 HFT for like 300 days, right? So they'll have far more influence because they have more skin in the game. So it kind of aligns the incentives in that way, where people who actually have influence on the protocol are the ones who also have like long-term skin in the game, right? So and then this translates into hashwares where your VHFT power is also used to dictate your avatar, or maybe let's start a hashware. So you get into NFTs, and then you have your metaverse avatar as a user, as you and we can go into that as your next set of questions. But that's the general idea of HFT. Is we're starting as a governance token, and we are defining utility based on user feedback as it goes, which makes for a more decentralized way of building token utility as opposed to it coming top down. So our general philosophy is product related decisions could be top down, but token related decisions could be more vote by committee because there's more stakeholders who own that.
So I think the two takeaways there is because of the vote escrow, you can stake
Mm-hmm.
the HFT,
Yeah.
and then you earn sort of like governing rights in returns, and then you can change. There are a lot of like you mentioned, proposals going on, including a fee switch, but that also hints that right now Hashflow is commissionless, right? Zero commission.
At the moment, yes.
Yeah. And this is, I mean, this has been a debate on a lot of dexes as well, on whether to the fee switch problem, right? And then sorry, do you want to add something here?
Yeah. No, no. Actually, I'll let you finish your sentence first, and then maybe because you might say exactly what I'm about to say. So go on.
No. The second part was just so the first part is staking,
Mhm.
and then the second part is governance. So I just wanted to sort of summarize the main purposes of HFT. Go ahead.
Yeah, no, absolutely. I was just going to add on the fee debate. I mean, at the end of the day, I mean, you need revenue, right? As anything, otherwise it doesn't. It's not a sustainable business to begin with, right? And I think so. It makes sense to have revenue. The question then becomes again, if many of the people here are like HFT holders, this is actually good for them to think about as well as they go. Because the good way, a good rationale here is we can add revenue, but then again, you also want the quotes to be competitive, right? So otherwise you'll lose on that. So where how do you kind of adjust that where you're offering good quotes which are competitive, but also you're able to generate revenue? That's sort of the framework you should be using to dictate how we should determine the fee params and so on. And usually things like stable coins, where mostly people expect them to be one-to-one, it's hard to charge any fees, especially when you have things like Curve, which basically don't charge, which are like offering like one web spread. It's really hard to add anything more on top and make any money. So yes, you can have lots of volume, but you may not make any money on that pair because literally there's no room to make any more money. On the other hand, uh, long tail assets which have like wider spreads, you can actually be a little more aggressive in terms of charging fees and still end up making money because pretty much everyone is offering like 30 web spreads, 40 web spreads, right? So in that scenario, even if you add 5 web fee, you will actually be able to be more competitive, for example, right? So this is a hypothetical I shared, but that's just a framework to use to figure out how to determine revenue streams in the future.
Mm. So for competitive trading pairs, where even if you add a commission, you might still be very competitive. I think those would be a good places to start. And I
Yeah,
think Uniswap also starts with several pairs. I think their proposals that haven't been implemented yet, but
yeah. Yeah.
we'll start with specific pairs first and then move forward.
Yeah. I mean, you need to think, right? But in order to be competitive against Curve, they basically reduce their stablecoin pool fees to like pretty much like 1 bip, right? So, and then for long tail, you'll still see like 30 bips, or even like 1% fee on some of them, right? So, which again, they're like, well, if this is the asset pair that's only available on Uniswap, no one else is offering it, then might as well charge 1% fee, right? So on the other hand, if this is a thing everyone is offering and the fee is like literally 1 bips, then sure, you can drive more volume in that pair because it's a popular pair, but you wouldn't be making any revenue on that because again, if you decide to increase the fee, then you'll lose on the volume to your competitor. So that's something to think about, right? So
Okay. Moving on to the next question. I guess we were building this up for some time now. So could you shed some light on what Hashverse is?
Yes. So Hashverse is a playful name for the governance that we Hashflow governance, right? But there is a bit more to it. So historically speaking, I think it's been like the last year and the year before. There's been a bunch of DAO ideas that came about, and the general idea of DAO has been a group of people with common interests, and they are basically a crude way of putting DAO. Obviously, many may disagree with this. Is it's a decentralized VC fund, right? So where a bunch of people are putting in money, and they're basically investing that money into things that they like, right? But then it's managed by a decentralized set of stakeholders without the formal organization that the way your traditional VC runs, right? And then there was more interesting ideas around how the DAO should work, and there's been a bunch of interesting proposals came about the last year and so on. But generally speaking, I think the way we wanted to do with DAO is build a more interactive, gamified experience that makes participation in DAOs more fun. Like we wanted it to be more than figuring out how to spend money, right? And more than just voting on one or two proposals that may not even be relevant to me, right? So like sure, I can vote on changing this parameter to optimize for this particular yield on a certain pair, but that may not be something that everyone can participate in because they may not even understand what that means to begin with. So how do you build a more inclusive community where anyone with any skill set can participate and be part of the broader community, and be a active citizen in the guild, right? And I think gamification is a great way to achieve that. And I think one of the things NFTs did the last year and a half, is they proved that you can actually build very strong communities with like a common bond by simply using JPEGs, right? And when people make fun of monkey pics, I'm like, yeah, well, there's just a lot more than that. Like, it's not just a monkey pic; it's a monkey pic that everyone loves, and because that's a monkey pic that everyone loves and shares the same sentiment around it, it actually brings them together. And because it brings them together, it basically forms a much stronger community, right? So you can actually apply these NFTs to kind of gamify this entire experience, and use that to incentivize more activity that goes far beyond just voting or figuring out how to spend the DAO treasury, right? So the idea behind Hashverse is to create or foster such a community, right? So what it's going to look like is we already started pre-staking, where people are already staking. There are like 7 million in HFTs already being staked for people to participate in the DAO or in the Hashverse. But users are going to mint their avatar, which is going to represent their character in the Hashverse metaverse, and they'll be able to complete various quests, which may relate to trading competitions, which may relate to creation of memes, creating artwork, or just building the community, right? And the more you contribute, the more you earn over time. And then your avatar evolves to earn like new NFT items that you can use and apply within the gamified RP experience to basically again. So you can do all these fun things, and I think this whole set of it's gonna feel like World of Warcraft or Assassin's Creed in a way, but at the same time, you're basically again doing all these things to improve the product, but then bringing in new people to use the product and drive revenue, but also creating this community where people can partake and be a part of that broader community together, right? And everyone with any kind of skill set can be part of that. You don't have to be a trader, or you don't have to be someone who understands smart contracts, or how to move money to be part of this ecosystem, right? That's the whole motivation behind how do we make this cast a wider net where everyone can be part of it. That's the general idea of Hashverse. So I think this also answers the question: what makes Hashverse unique in the Web3 world? that
Yeah, so I think just some comments from my personal perspective. So I think a lot of these governance tokens, or these governance token holders, as you can see on like a lot of the on-chain analytics, right? Most of the uh, like governance tokens aren't actually actively engaging in proposals, engaging a lot of like maybe some people are more speculative towards these governance tokens, so uh, but the other side is that it's actually quite hard to get actually involved in these governance proposals. You need to have a deep knowledge of, economics or of the product itself, of technical knowledge, or understand deeply about whether technically or economically about a certain product. So if there is like a gamified element, I guess this would really draw in more, like you mentioned. I think the fusion here between involving the NFT and how creating sort of like a metaverse or a metaverse of DAO is really a very innovative way. I'm not sure if that.
So generally, if you think about it, the strongest communities that exist on the internet are gaming communities, right? What that tells you is one way to build community that is like really strong is through gaming or gamification, right? And there is lots of elements and traits in a DAO that can be gamified if you leverage NFTs in the right way, and you can build such an experience, right? And it doesn't have to be either or. It can again directly impact your general product, because crypto is not just, because when you're starting a crypto company, you're not just starting a company, you're basically starting a nation. You're creating, you have a product, then you have a community that is behind that, then you create this cult where people actually feel this ownership and want to be part, feel like they're part of everything that's happening, right? So, and the way you foster that, I think gaming is one way to, or one way to achieve that, right? That's so how we've been thinking about the problem.
Yeah, so a great follow-up question. This is also from one of the live comments. Takwa 18. Sorry if I pronounced it wrong. The use cases of the HFT, NFT, and passes.
I will give a little more alpha on this one than I have in the past. So, if people have gone on the Hashflow dashboard, they will see something called, it should say on your app, it says XP, right? So and we'll dive more deep into what that would look like. But the idea is a bunch of the NFTs we issued in the past will directly relate to how you can bootstrap some of the XP, right? So that's something we'll be announcing soon on what the metrics will look like. And then beyond that, we've also issued like the NFT called a creations coffer, which give people some power boost when they stake tokens, but then there'll also be more utility around that once the actual gameplay begins. But people will be able to use these in-game items to basically maximize their power, their damage, and if they are competing on different quests, they'll be able to utilize these NFT items as if they would use like items inside an RPG game, right? So if you've ever played Assassin's Creed or Counter Strike, you can see how people use these weapons and armors and things like that to basically gain advantage over your other opponents, right? And as you go towards building or completing the quest. So that's sort of how we envision these items to be used, and we'll release. The smart contracts have been sent for audit, and I think we'll be releasing more details around the mechanism in the upcoming weeks.
Definitely looking forward to it. All right, so this, I think, congrats to Shreya predicting this question, predicting this answer. I guess aware of the time, let's take one or two more questions. So I guess a good wrap up question is, what's the anything that we can expect expect upcoming in 2023
Oh,
and the roadmap?
a lot. So I'm excited for it. So Hashflow, as we talked about, and we'll be shipping Hashflow this quarter, right? So that's the first thing to look forward to. And then we also, in our roadmap that we published, if you go on our Twitter, I think we already published the roadmap on what to expect this year. And I think one of the other things that we'll be launching is until now Hashflow cross chain, which we sort of didn't talk about in this area, but that's fine. But generally, Hashflow does support cross chain swaps and without using any bridge. So as a user, you can simply natively swap any asset between an EVM chain, like you can send Ether, receive BNB, without having to use a bridge in like one single transaction, right? So that's a really powerful feature, and it's even more powerful because uh, again, it has the same properties of no front running or MEV attacks, even if you're trading across two different networks, and you'll be receiving exactly what you were promised, right? Even if the transaction is taking place across two different chains. So it's that's already live, and we'll be expanding this to add like a non-EVM chain to it, and I'll let you guys guess what that non-EVM chain would be in the meantime. But many of you would be happy to see that once it goes live. But the idea is to add a non-EVM extension, but also support non-EVM to EVM cross-chain. But that's something we plan to add along with Hashverse. And then we've talked a lot about price discovery on this call. And as you can tell by now, I've been like pretty opinionated about how order books are a great way to do price discovery. So that's something we've been heavily researching. And I think that's something that we should be looking forward to this year. And the idea is to build something as seamless as Binance in terms of user experience of trading against an order book, but without custody and counterparty risk. So I think that could be interesting. Right. So I think that's sort of the goal and the holy grail to get to, and then hopefully we'll deliver on that this year. Right. So that's something too. Because if we do actually achieve that, that'll be massive, right? Because you're basically saying you will be able to circumvent things like what happened with FTX and so on, and still get that kind of experience where you don't have to worry about any friction. So that's kind of the holy grail of trading, and that's kind of what we want to get to, right? So I think, and hopefully this is the year where we accomplish that. So,
Okay. So
and if
last
anyone wants to
question.
help with that, we're hiring. You don't have to be at Facebook for doing that. You can be a non-Facebook person and still apply. Uh, you can DM me on Twitter. Or you can that and my DMs are usually open, right? Yeah, or I don't know, just message Larry and Larry will tell me about it. So
Yes, I'll have a secondary career as a hiring manager for, for Hashflow. So I'll put your Twitter up afterwards. But for the last question, I guess this will be a quick one. So this is also one from the live comments. Why do you call it Hashflow?
why do I call it hash flow? So it's a spin on the word cash flow, right? So traditionally, when you talk about cash flows, right? Uh, and the idea is in cryptocurrency, uh, your money or cash is represented as a cryptographic hash function, right? So it's anytime you move money, it has to be secured through hashing, right? So basically, what you're seeing is a massive flow of hashes or hash functions, and hence the word hash flow, because it's the word, it's a little play on the word cash flow.
It's very catchy. I think a good name really contributes to a good development. But yeah,
That, that,
if you
that,
guys
that,
are interested,
that, and I was also very picky about naming, where I'm like, okay, we should not name anything that is not 2 syllables and 8 letters, and does not have a .com
yes,
available. So
I think that's very, very important. It's good. I think that you're able to get the HFT
yeah,
is also is also very, very very good with the high frequency trading how do you say connection there.
yeah, exactly. A play on the
Yeah,
words.
yeah. So yeah, you can follow Varun on Twitter at Gangdolf the Brown if you are interested in. You said two backend engineers.
Yes. Uh, Also follow Hashflow, and you can DM either Hashflow, the corporate account. It's not as corporate. We try to be more lighthearted with our tweets and
Community.
meme games. So if you've understood by now, we don't take ourselves too seriously, but at the same time we do build serious products that can be. So yeah, you can write to us both on Hashflow or just DM me or Victor for resumes, and or just and we'll go from there.
Yeah, so we do have this on replay. So if you didn't catch that, you can go to the replay after that, or you can go to our YouTube where you can scroll around, and then the Twitter for at Hashflow would be directly at Hashflow. You'll find it on Twitter. So this last part is really for me to summarize what we've learned today. So I actually took this off. Hashflow HFT launched a learn and earn course on Binance Academy recently. It's a great content. Really gets you up to speed on what Hashflow is. And for whether you're a beginner in crypto, explains a lot of these technical terms in very simplified ways. So yeah, so I'll go through these slides. Varun, feel free to jump in whenever if you think of something that you want to add additional notes to, or correct me if I'm wrong. But I hope you have paid attention, because we do have a prize quiz at the end. It's same as yesterday. We will provide a QR code, and then you'll scan those QR codes. You do have to get all of the questions correct, so pay close attention. I hope after yesterday, you know that the PPT is very, very highly correlated to the questions asked in the prize quiz. So let's get started. So I think first, I think the most important thing, the biggest takeaway today is what is actually Hashflow. It is a DEX, right? It's a decentralized exchange, decentralized trading protocol, and which focuses on interoperability. Like Varun has also said, we will also get cross chain trading, and then zero slippage because of its RFQ, and then MEV protected trades because of the same infrastructure. And some metrics on Hashflow: 11 billion in total trading volume. This is up to date, right, Varun? You're muted, but I would assume so.
Yeah, it's I was just gonna say 12 billion now, not 11, but
Oh,
yes.
okay. Thank you. But getting updated billions by the second, but yeah. So I would have to. This was taken off of the course. So if you go to the course, we'll see if we can update that figure as well. But yeah, launched in 2 years ago. I one and a half years ago. And already 11 billion in trading volume and a lot of unique users. So how does it work as a DEX? How is it different from other AMMs? I see a lot of questions regarding this today, and Varun has gave very, very detailed responses, detailed answers on these. But essentially, the background on DEXs is the common DEXs out there uses automated market makers, where everybody can become like liquidity providers, but there are trade-offs where liquidity isn't that efficient, and for traders it might not be as good, because first your trades could be front run by the validators, and the liquidity might not be as good as traditional like centralized exchanges like Binance, right? So how Hashflow solves this is by connecting the liquidity off chain and then providing the settlement on chain. And you can like you don't need to create an account, right? Just like a lot of DEXs, you just need to simply connect your wallet. There's no tedious account creation involved. And right now, currently there's no commission for the trades, but going forward, if you are involved in Hashflow governance, this is something that you can think of. And regarding the mechanisms, which we've had repeated again and again today, Hashflow uses a request for quote. I guess many people that's not from the finance industry, you can just Google this and look at like what's OTCs, what are market makers, what are automated market makers. I think these are some of the basic concepts you have to have when going into crypto. So the request for quote model gets quotes from market makers, so you get the liquidity or the benefits of the centralized exchanges, but also have the benefits of on-chain of an on-chain DEX where you have full custody of your assets, but also you enjoy zero slippage and MEV protection. Yeah, so the takeaway here is settlement on-chain and pricing off-chain, or liquidity, off-chain liquidity. And then we touched on some of a lot of users asked, there is the HFT token, which stands for Hashflow, not high frequency trading. And HFT is used for staking. You can stake HFT. We also Simple Earn is the product that is hosting today's AMA. You can also subscribe your HFT to Simple Earn for flexible savings, for flexible returns. And then for the Hashflow, Hashverse is a gamified DAO where I think one of the only a gamified DAO coming from a DEX, because I think DAO governance, like Varun has mentioned, is quite
It's not as fun. Not yet.
yes, perfectly put. So bringing this into the system, if you hold HFT, you can be actively involved, and not just you don't need to have technical knowledge or have a bachelor's degree in economics to be involved in the governance and the DAO. So really to get the community involved. And regarding the HFT, you get rewards and in-DAO health, and staking, which we have mentioned. So again, Simple Earn is the product that we're sponsoring. That's hosting this AMA today. You can go on to our products to earn rewards on your idle tokens, such as HFT. So you can subscribe HFT to flexible products actually, to get passive rewards or passive income on your HFT, and it is principal token protected, a token principal protected. And like I mentioned, Hashflow is launching a learn and earn course, learn and stake course. So if you are a new user, so if you haven't used Simple Earn before, and you go onto the course, you can complete courses for BNB, BUSD. So you can complete courses for all of these. Solana, Hook, HFT, and you'll be able to get these rewards. If you are a Simple Earn user, you can complete courses for the BNB and BUSD. And I think crypto is one of the fewer places where you actually get paid learning, and actually where you can build self-development and earn some money. So I hope you guys have paid close attention to the slides. There is going to be a replay after the AMA ends, so you can go onto YouTube or stay on the Binance Live for a few minutes to wait for the replay. But you can scan the QR code on the right side to submit your feedback. And there is a prize quiz with questions. And you do have to log in. You only get one chance to submit. I will only take the first submission. This will go on for 1 day. I'll close the survey in 1 day. And the rewards will be distributed in 30 days. Both for the questions that have been chosen today and for the people who have completed the prized quiz. But yeah, thanks guys so much for tuning into the AMA. Varun, how did I do summarizing HFT?
I was muted.
I think you're muted again.
No, it was perfect. I think it was a pretty good summary actually. I was going, well, maybe we should use this content for ourselves too, because it was pretty well done. Maybe one small correction. It's not HFT token. It's just HFT, because HFT stands for Hashflow token.
Oh, okay.
So when you say HFT token, it's a Hashflow token.
It's redundant. Yeah. Okay, yes. Got it. Thank you for the correction.
It's like in the US when you say chai tea, and I'm like, oh well, it's just chai. There's no chai tea, because chai in Hindi means tea. So.
Oh, okay. So. It's the redundancy, but yeah. So it's just Hashflow token. But yeah, the content is available on Binance Academy. You can learn a lot there. I think Binance Academy has a lot of great articles on simplifying crypto and blockchain terminology and contents. But yeah, it's really glad to have you on, Varun.
Mm-hmm. Of course. No, thank you for having me. This was fun. I think we can't believe we spent 2 hours nearly. It was actually
yeah, we're 1.5 hours. Yeah, so thank you guys so much for tuning in. Any last comments you want to add?
No, I think this will be a just for particularly for all founders and builders who are building, and just stay persistent and don't let the markets and things dictate how don't let external factors bring you down, right? Because this is the time to build, and I think success comes to those who are patient and wait and are persistent, right? So I think I think this is like where the time to build things and make a difference. So keep building.
Thank you for those inspirational words. I'll definitely write that down. All right. Thanks, guys. Thanks so much for tuning in. Thanks, Varun. Very, very informative session today. Really glad to have you on.
No, of course. No, thank you so much to Binance team for being super supportive since day one. I think you guys have been phenomenal. So really appreciate that. Thank you.
All right. Thanks, guys.
Of course.